Okay, everybody, here we go. It's me, Gregory Manino. Wednesday, May 29th, 2024, and we need to talk epic, crazy stuff going on, and we're gonna figure this all out as usual. Again, we are so far ahead of the curve. None of this surprises any of us, and I love that. I would be willing to seriously bet a lot that every single you out here, every single one of you out here, who follows this blog, you laugh when you see things happen, hear things, because it's just what we have said would happen. It's incredible. It's almost like we have a script of what's going to happen because we do. We know what our enemy wants. We know who they are and how they're getting there. Anyway, look. So the story today, really, excuse me, uh, was the debt market, a pretty substantial sell off, and it's even getting attention on the mainstream media. We're going to talk about that. The debt market is flashing red. Red. Let's look at that real quick. Okay. I'm referring to specifically the MMRI. Now, you and I have been following this trend line. Look at this trend here. Okay. This is ugly. This could not look worse, in my opinion. We bounced off, we're going higher, and we could go much higher very, very quickly. If that happens here, you can expect this stock market to turn around, but fast, and people are not going to be happy. However, with that said, again, stepping back, understanding the big picture here, I still believe the Fed's going to jump in. And first of all, let's back up a little further. We understand and we all know this. China is dumping U.S. debt faster than they ever have in history. Debts and deficits are ballooning. Keep that in mind because we're going to go over some stuff that's going to blow your mind. Okay. Now, the Fed's goal here is, well, to continue to inflate, to buy it all, to own it all. This is what central bank's goal is, period. The end, they are more than happy to buy more debt. They are more than happy to lend for war, expanding war, whatever they got to do. That's where we're going here. That's why debts and deficits are skyrocketing at a pace, again, never been seen before in history. Oh, believe me, it's not a comedy of errors why we got here. This is all deliberate. It's just going exactly how you would expect because we talk about it all the time. Because again, we know who our enemy is, central banks. We know what they want. We know who runs the economy. We know who runs the financial system, the financial markets, the monetary system as a whole. It certainly isn't the Bidens or the Trumps. It is the central banks. Again, the Bidens and the Trumps. This is just a smokescreen. Look over here. Don't look over there while all this other stuff is going on underneath. There's not one thing right now that is going on that has not been thought about in advance, and now we're seeing the side effect of it. Every freaking thing. Anyway, going back to the issue here. This sell-off in the debt market is very interesting. MMRI, the Mannarino Market Risk Indicator, as I just showed you, this is not looking good. We are clearly in a red zone. Sure, we've been here before, much higher. This was like MMRI like 320 or something. If you recall this, oh, the market hated it. And we may be getting there. We could surpass this. If we do, well, you can expect this market to fall substantially. And again, as I have said, look, people that are in this market, Becky, thank you. I appreciate you. Unless you're a newbie here or you have no clue about what it means to actually be in the market, that means you can't always be in the market. You have to sometimes pull cash out, sit in the sidelines. If you're in cash, you're in a position. It's called a cash position. You understand? And if you want to get out here and sit back and wait till this turns around, nobody, not one single one of my lions is going to blame you for that. Maybe some newbie freak who has no idea what he or she is talking about would say, ignore the nonsense. They laugh at these people because they have no idea what's going on here. It's never wrong to pull profit. It's never wrong to get out of this market, reevaluate the situation. I have done that. I have sold everything in the past. You all know that, okay? Just to sit back, get my head back on straight, reevaluate the situation, and get back in. You understand? That is what a professional does, period. And that's what we do here. So, like I said, you want to get out, that's fine. However you want to play it. Again, this is kind of a touchy situation here. Everyone's risk tolerance is different, and you got to make your own decisions on all this. Anyway, look, let's start talking about a few other things here. As I said, it really isn't the stock market that took a big hit today, which it did, not big massively, but took a hit anyway. It's the driver. It's the debt market, and this is alarming. There's just no doubt about it. Now, talking about the mainstream media, yeah, they're admitting long-dated Treasury yields rise further above almost 4-week highs on bond negative developments. What are these negative developments? No one wants to buy the debt. No, they're talking about a poor auctions. Auctions for the debt have gone miserably. That means either the Fed's got to be the buyer of last resort, which they want. You know what the central banks want to be? Two things. The lender and buyer of last resort. Period. That's what they're working towards. This makes central bankers happy. You have to understand that because they want to buy it all. And they buy it all with cash they just create out of nothing. And of course, this is currency negative, purchasing power negative, debts and deficits balloon. Now, keep that in mind here. This is CNBC. This is getting attention on the mainstream media. So when they have to talk about something like we're going to cover right here, there's a big problem, Mitch. Thank you. So let's talk about this. Global debt has grown. Are you ready? To 315 trillion this year. Now, with regard to the 315 trillion, this is at face value. Whenever they're talking about the debt, the national debt, or deficits, or whatever it might be, that's face value. They're not speaking about the associated derivatives on either side. It's in the quadrillions, multiple quadrillions. So this year alone, and this is what, May 29th. All right. Global debt has grown to 315 trillion. Now, it goes on to say, and there's no way this is really small print. The latest global debt wave. Okay, you and I, you notice that word wave? Yeah, we've used that before. Waves of debt. Yeah. Has been the biggest, fastest, and most wide-ranging since World War II. Now, let's put this into perspective. We have an economy in free fall, although, according to the Fed's beige book today, the economy is expanding. How about no? Travis, thank you. Okay, what the Fed here is not going to tell you, and you know this, is today we have a global economy contracting at its fastest pace ever recorded. Okay, don't take my word for this. Look it up for yourself. So we have an economy contracting at its fastest pace we've ever seen, ever in history. All right. Global debt soaring at its, what's the wording? This is what they say, not Greg Manarino. Biggest, fastest, and most wide-ranging since World War II. But they mean ever. Okay. So contraction, soaring debts and deficits, just as you and I said would happen. But again, Fed beige book, everything is perfect. Everything is fine. We're expanding. But what did Fed Mester? The ghoul. Oh, here we go again. The ghoul said, oh, it's very uncertain what's going on. It's not uncertain. They're going to lie to us. They're going to distract us. They're going to deceive us. They're going to tell us where to look via the mainstream media. Biden, Trump, here, there. Don't look at them. You understand? So this is a game, and we are being played on a grand scale. The scale of this is just absolutely incredible. Now, here's something else that's kind of interesting, and this is, again, there's no accountability by Fed presidents or anyone else. This is why they can lie to you, because no one's going to hold them to account. Now, this is interesting as well. This is from Project Syndicate. Actually, one of you out here sent this to me, and I appreciate you for doing that. So again, talking about inflation and the stock market. So this is why another bout of inflation could occur sooner than markets expect. Let me explain this to you. The market, or anybody who knows what's going on, including every single one of you out here, realizes inflation has nowhere to go but higher. Much higher. Currency devaluation. People, that's the name of the game. And no matter who they stick behind the Resolute desk, it's going to get worse. Trump has already said it. I personally believe the way everything is setting up, the creature behind the Resolute desk will be reselected. This is not an election. However, there's a little caveat here. The stock market is a major predictor, in case you don't know, as to who will win. If in fact we see this market get propped up, if in fact we see the MMRI crater, stocks go up, all of a sudden some miracle happens. Abe knows what I'm talking about. Thank you. And someone's buying the debt. I wonder who that would be. Someone's propping up the stock market. I wonder who that would be. Then, of course, that would more than likely favor Biden. But if this market rolls over and we start to see MMRI 315, 320, 340, and this stock market goes through the freaking floor, well, then, of course, it would be more than likely that Trump will be selected. But again, you can expect, and he's already laid the groundwork. He's went to Wall Street. He's talked to the corporate executives. He's made them every promise under the sun, just as Biden has. Every president, whatever selection, goes to Wall Street first. Then they go to you. That should tell you something. I hope it does. Anyway, so just understand it's not going to stop no matter what they do. This has all been, all of these wheels have been put in motion decades ago. We're living in the side effect of it. Now, I've said many times that, and you know this, that the Federal Reserve, they're basically the rulers of the earth right now. It's kind of an interesting phenomenon. This is also from the Fed here. Goldman Sachs executive Beth Hammack named next president of the Cleveland Fed. Here's a little homework assignment for you. The Muff Dog. Thank you. Go check out how many Fed presidents are ex-Goldman Sachs. Almost every single one. Goldman Sachs, the super bank, they got us all by the, you know what I'm saying here? Testicles. Can I say that? They got us by the testicles? Yeah. They run the show. Goldman, there are two main Wall Street super banks. JP Morgan, why? Because whenever there's a problem here, who does Washington go to? They go to Jamie Dimon. Jamie Dimon, the CEO of JP Morgan. They go to him first. And, then you got Goldman Sachs, with pretty much every single Fed president, current, previous Goldman Sachs, including this new one. That should tell you something too, people. Most people have no idea what's going on or why. So I was just scribbling down a few things here. Let me just make sure I covered. So anyway, just understand what's happening here. Fed is telling us, again, the beige book today, the economy is expanding. Nothing could possibly be farther from the truth here. The currency is being devalued faster and faster. Debts and deficits are ballooning. We've never seen anything like this before, but the economy in reality is contracting at its fastest pace ever. Weekly mortgage demand falls through the floor, cratered. No one saw that one coming. Imagine my shock. MMRI in the red zone. Look what I wrote here. Look, sometimes I write these notes to myself here. Okay, see? Right there with the little exclamation points here, get long commodities. Does that sound familiar to you? I hope it does, because this guy has been explaining that to you since I don't know how freaking long. My favorite of all time, here, silver. My second favorite of all time, there, gold, okay? But again, some of you, believe it or not, and I almost don't understand this, but some of you do not want to hold this stuff. If you need exposure via an exchange traded fund, nobody has treated you better than this guy. My newsletter, free to everybody. Link in the description of this video. Joe, thank you. Yellow stain, exactly. I put out several newsletters regarding exchange traded funds, which will give you exposure to a broad basket of. You can also focus on these things individually, but people, look, do yourselves a favor, okay? I think, and I believe this with all I have, because I've been telling you this for a very, very long time. This one, of all the commodities, this is real money. You understand? This is it. This is number one. And I really hope that you have a stash and you're stashing more. Look, I do not sell this stuff. I make nothing off of it. Like I told you, I've had people say to me, hey, Greg, let's make a coin with your face on it and bet against the debt, become your own central bank. I refuse to do it. I refuse to do it because people would think I'm capitalizing on this. Okay. If you notice, I do not have a single commercial that I like. A lot of YouTubers out here, they get offers, and I've had some pretty magnificent offers. Hey, Greg, promote my product. I don't want to promote nothing because I am a real guy. Okay. And I don't want to say, well, people to say, well, Greg is capitalizing on this. No, I'm coming out here telling you like it is. And I hope you see that. Okay. Anyway, let me see what else here. JEPI, JEPQ. Yes, I did not sell yet. I still believe there is a chance that the Fed is going to jump in here and start propping this, but I think it probably could be pretty soon here. Actually, I wrote commodity exposure twice. I'm crazy, man. China's dumping on debt. Sell-off in bonds is pretty profound. Anyway, look, with regard to JEPI, JEPQ, I'm still building a larger position in JEPQ. I have a lot of JEPI. I'm planning on buying more on some of these dips because I still believe this, and maybe I'm deluded. It is very possible. Again, look, this is my indicator. I created this. We are in a red zone here. But gauging from a lot of things, it appears to me we could see this drop pretty soon. But again, I have an extreme, like red zone, risk tolerance. I've been in this market for a very, very long time. Those of you that have been bullish with me since the first selection of Donald Trump, we've been long this market, and I'm not going to lie about it. We've done really, really exceptionally well. So if the market falls a little bit, okay, you can't win everything here, people, but don't be greedy either. Ignore Gordon Gekko. Greed is not good. Maybe it's legal today, like he said in with the second Wall Street. Mitch, thanks. But like I said, professional money managers move cash around all the time. They take it out of here, they put it here. Sometimes they sit in a cash position. If risk is becoming too extreme, and I really hope you guys and girls are keeping your eyes on this, okay? The MMRI, it's free for a reason. I make it available to you, every single one of you, because information is key. All right. And here's a bit of information for you. I personally believe this right here is the best market risk indicator that you will ever find. It works if you follow it. It's just, again, I'm not going to sit here and blow sunshine up that thing's butt. But if you're in this market, if you're one of my lions, you get it. Anyway, look, we covered a lot here. And I think I'm doing a pretty darn good job of keeping you ahead of it. Do this homework, all right? Find out how many Fed presidents are ex-Goldman Sachs. It's unfreaking believable. It really is. Almost every single one of them here. With regard to this market, another bout of inflation, maybe. Yeah. How about absolutely freaking definitely? We all know that's coming. This is a lie again from the Fed. No accountability. They can lie to you repeatedly, over and over, and again, via the mainstream media, tell you where to look, who to hate, who to love. Again, it's all a grand deception. Biden's, Trump's, they don't matter, okay? They could put a farm animal behind the Resolute desk and everything would be exactly as it is right now, just in case you were wondering on that deal. Global debt surging faster than anyone could have expected. How about no? You and I called it out before everybody else. Bond market, we got big problems here. This guy, number one, wants to thank you all for being here. Okay, and thank you for those thumbs up. We're doing pretty well today. I'd like to, if we could hit just like 800 by the time I finish this, which is going to be very soon, it would really make Greg Mannarino happy. So please just look, if you're part of my team, if you consider yourself part of my team, please give these videos a thumbs up. It allows the algorithms to pick them up. And then people see this stuff. Tell me where else you're going to get this stuff. I don't know. But I am working my rear end off here to keep all of you ahead of the curve. And that's exactly what we have done. Again, it makes me laugh when you hear things and you see things because we've called it all before it happens. It's amazing. It really is astonishing to me. So if you are on Team Greg, absolutely. Look at this, Rome. We're going to hit 800, I bet. People, you guys are so great. I didn't sell Coco. Goulstein. Coco didn't feel too well. He's kind of mopey today. He's sleeping, so I'm just going to leave him alone. But I promise to get Coco out here. Everything is overpriced, yes, but that's not because these objects, like whatever it might be, have gained in value. It's the dollar in this case. It's central bank notes which are being deliberately devalued. Again, I've told you all for over 10 years that central banks are in a race to the bottom. Who can suck the purchasing power out of their currency faster wins. That's the case. That's what's happening here. And it's not going to stop no matter who sits behind the Resolute desk, no matter nothing. This is their goal here, to bring the economy of the world, central banks, who are the government, to bring the economy to its knees, to bring the people to their knees, and have them beg for a new system. A new system is coming. They have a solution. Problem, reaction, solution. People, look this stuff up. This is the truth, okay? And people know the truth when they hear it. I hope you're hearing some truth here, okay? Because this is where we are. Anyway, yes, Trump does like crypto. He is accepting crypto donations. Just in case you want to donate to him, you can go to his campaign. He has changed his tune on cryptocurrencies, and don't hold that against Trump, okay? Whatever your feelings might be, I happen to like cryptocurrencies. You all know that. I believe all of us need to have some cryptocurrency in our portfolio, even if it's just a little bit. You understand? Because again, this is very simple. Debt market is going to implode. The debt is overwhelmingly ballooning. Okay, it's going to implode. It's going to implode by design, not by a comedy of errors. Implosion in the debt market means that we are going to see a spike in the MMRI that is going to make people's heads spin around like the freaking Exorcist. Does that sound familiar to you? Because it is. Once this happens, you're seeing what's going on here. When this happens, markets don't like it. Markets sell off. Debt market sell-off means stock markets around the world are going to crater faster and harder than they ever have in history before, or probably anything after. Thanks, Mitch, again. See where I'm going with this? Cash does not grow money wings, little cash wings, and just fly away to money heaven. It doesn't happen. I don't want you to think that happens. Cash moves from one reality into another. In Greg Manarino's professional opinion, is going to move into commodities like a tidal wave. It's going to move into cryptocurrencies as well. More than likely a tidal wave as well. You have to understand, I have laid out my case for all of you where the Dow will eventually go. With regard to gold and silver, where it will eventually go. My case for where cash will move because of how the markets work. Cash moves through the markets. Don't take my word for this, okay? In predictable patterns. Risk on means cash goes into the stock market. It comes out of assets where it should be going into. Look for assets that are not widely held. For example, gold, silver, platinum, palladium, and cryptocurrencies. The entire market cap of market capitalization, the whole worth of it doesn't even equal one Dow component. So few people hold cryptocurrency. This is why it's so volatile as well, in case you were wondering. You understand? That's where it's going eventually. So in my view and in my opinion, you can't possibly go wrong. If you had to pick one, pick Bitcoin. Why? Because it's the mommy. I'm not saying it's the best one, nor am I saying it's going to outperform any of them. I'm just telling you, it's the mommy. Bitcoin is the mommy. Look, there is always the potential for a black swan event, but if you see it and you hear about it, case in point, okay, it's not a black swan. A black swan event is something completely out of left field, engineered, of course. They all are. But something that they plan that you don't get to see or hear about. When you see, again, I can't tell you how many times YouTubers, big ones with big followings, have pointed towards a black swan. It never turns out to be right, because you can't. Once we hear about it via anywhere, it no longer can be a black swan event. Jeff, thank you. Anyway, people, look, I'm going to get going here. Kind of a long video, but thank you for being here with me again. I really appreciate you all for your support, your love, and everything else, honestly. All right, so with all that, I'm going to let you all go. I'll see you in the morning, as usual, people, until we meet again. What's Greg Manarino going to say? He's going to say, take care of yourselves and take care of each other, because we have to have each other's backs, honestly. All right, love you a lot. See you in the morning.